Hello everyone, John Coleman here. I've been a mortgage broker for over 16 years at this point. What I want to talk about today is mortgages for the self-employed. First thing to say, definitely more difficult. They will look for more paperwork. They look at the industry you're working in. They take a more forensic view on a self-employed application than your standard PAYE worker. However, you can set goals for your business in line with the mortgage that you're looking for. So in other words, you can kind of almost reverse engineer. If you know the house price that you're looking to buy and you know the mortgage you're going to actually need, well, you can basically determine what level of income your business needs to be producing to qualify for that level of mortgage. However, just I suppose it's worth highlighting the differences between PAYE workers and the self-employed. First thing, with PAYE, you only need to be working for 6 months with a company and they'd be prepared to give you a mortgage. Self-employed, it can be 1 year, 2 years, 3 years, depending on the structure of your employment. So, talking about structure, what different structures are there? Well, they will also determine income. Will be determined in different ways. You can look at income that can be if you've retained earnings in the business, you can actually add that. You can actually include depreciation. There's a number of different things you can actually include in the overall determination of your income. So that is worth pointing out. Now, this is also worth pointing out. You may have your figures for a particular year done and you've earned X amount of money, but if you haven't paid your tax on it, some of the banks won't take that income into account until they have seen the tax has been paid on that level of income. Other banks will work with it, but not all. Different types of self-employed, well, they be good. Obviously, your sole trader, a limited company. With sole traders, you can basically include retained earnings. You can include, depending on what level of ownership you are, they will give you a percentage. The income they're likely to take will be an average of either 2 to 3 years of your salary and 2 to 3 years of any retained earnings that you may have. Sole trader is slightly different. Sole trader basically your net profit. The average then will be for either 2 to 3 years. Again, you may be able to add back things like depreciation, etc., and some other items. Again, umbrella companies and contractors, more like for doctors, computer programmers. Some banks will want to see them for 2 years. Some will want to see for 3. Some will be prepared to work with 1 year, depending on the industry someone's been in. So again, it's all very much a case by case basis, and it certainly needs to be some planning needs to go into this to get yourself ready. So for how to basically get yourself a mortgage, well, planning. I'm more than happy to have a conversation with you if you want to have just tell me what you're looking to achieve. We can then come up with a plan to show you what you're going to need your accounts to look like to get you to the point of being able to get the mortgage that you need to buy the home that you're looking for. My contact details are below, and I look forward to talking to you. Thank you for listening. Bye.